Good morning, good afternoon, good evening, no matter where you are in the world. This is Howie, and I'm here to help you win with money. In today's episode, I'm going to talk about why I use options. Today is December 14th, 2022, and I'm going to show you my results of option trading for the year 2022. There's only 2 more weeks left, and I can show you my results so far. Before we begin the video, if you're on Facebook, join me in Investing 102. It is a Facebook group. That is where I talk a lot about my investments and some of the strategies, and I do post a lot of my trades on Facebook Investing 102. So let's get right to it. So the first question is, why use options trading? A lot of people hear different things about it. And I'm going to back up and show you the results of the stock market this year. So here's a year to date. You can see that the stock market has been downward trending this year. And at the worst point, right around here and right around here, we were down about 15% over here. And I think we touched down 22 or 23% down here. The market has recovered slightly, and I think we're down maybe 11 or 12% right now. I don't know exactly, but you can see the market has been downtrending. And one thing I love about options are there are many ways to play it. You can go long, you can go short, you can have a neutral strategy, you can go for big gains, small gains. You can play it however you want. So, because of that flexibility, options have been proven that even in markets where markets are not going up, an options trader can still produce profit, or they can use it in ways to combine it with other strategies to reduce risk. And that's what we're going to talk about today. Why do I love options? And really, the best way to understand this is to look at actual data. So I track all my trades into a spreadsheet and I use a pivot table. And for those of you who watch all my other videos, you know that I track my options trades through this particular spreadsheet. And here you can see my results so far. And if you drill in, you will see what I'm doing. And you can see I track dividends, I track iron condors, I track cover calls, and each month will look a little bit different because I do different trades and different things. Am I making money? So the question is, yes, you can see I'm making money. And you can see some of it is from dividends. And this is kind of hard to see, but if you zoom out, I have a different spreadsheet just for cover calls. And if you look at this and drill into this, quarter four cover calls show that I'm making about $5,000. And you can drill into this. So this is the beauty of using multiple pivot tables. And then this view is the same concept, except I view it by the different strategies. And you can see here my cover calls. You see this number ties to that one. And it should, because everything, if it's done right, it should tie up. So it shows you that I made $17,000 this year in cover calls. And then it will also show you which strategies did not work for me this year. And you will see what I mean. The credit spreads did not work. But let's see what type. So the call ones were $100. So it's a wash. But really, I got burnt on the puts. So I did some put credit spreads, and the market obviously didn't go in my direction, and I lost money. The iron condors are still okay. I made money, but not as much as the cover calls. And then you will see here, oh, I need to fix that. This should be one column instead of two, but you'll see cash secure puts are losing money. Now, I don't use cash secure puts to buy 100 more shares. I'm not a big fan of the wheel. I'm really only using this strategy to collect premium. And obviously, when the markets are going down, cash secure puts are really not going to make me money because, again, I do not want to spend my cash to buy 100 shares. I'm only playing the options, try to make premium. So the good thing about looking at this is you can see what's working and what's not working. Now, does that mean cover call is really the best strategy? And the answer is no. Generally speaking, I make more money in iron condors or credit spreads. This year has just been unusual because definitely my cover call strategy has been printing out money. Now, don't forget what this means. If cover calls are making money, it means generally speaking, your underlying has lost money because the market has gone down this year. So I want to talk about why is this strategy working for me. You see that I'm not just using cover calls, or I'm not just using credit spreads, or not just using iron condor. I'm using a mix of them. Because one thing you're going to learn about trading is you want to diversify even in your method. So let me explain what I do. One, I like to buy a growth stock company. So I'm going long on the underlying. I want my stock to have more value in 5, 10, 15, 20 years. Two, I would like the stock to pay me some type of dividend. Don't have to be a large one, but anything. And I'll give you a classic example. I own Visa. Visa pays a very small dividend, but I generally like to pick different stocks with different dividend yield because that's a second layer, because that means that you can make money on dividends regardless of markets going up, flat, or down. But the last piece of that is using options. If you happen to have 100 shares of a stock, I now can layer my third strategy on top of the same asset that I already own, which is I can either do cover calls or some other type of combination. And that's what I do. When I throw a cover call on, sometimes I will still do a cash secure put or a credit spread on the put side, or a put credit spread, which is out of the money, because then I can make money if the market goes up, stay flat, or go down a little bit, because I can collect premium on both the cover call and on the put credit spread. And both of those are out of the money, so I give myself some wiggle room so that you can be right on both sides. Now, there are times where you're not going to be right on both sides. The market moves in one direction, so you may lose on the cover call side, but your put credit spread will be right. And then what I like to do is adjust my position, which means I either take the profit, close it, and then reestablish a similar position by adjusting the strike price. And this is how I can do over 1,000 trades, 1,000 options trade a year, collecting 5, 10, 15 cents per trade and make a profit. And you see that, and I'm not trying to teach you that use only one strategy. Next year, this is going to look very different. I don't expect cover calls to make this much next year. I would expect some other, right? If the market flattens out or start moving up, I would expect you see a bigger profit on the cash secure puts, and you may see some bigger profits on. Actually, you see a loss over here, but I'll show some profit next year on the credit spreads. So this is why I like to layer on multiple strategies on top of each other, because the goal is to reduce risk but improve your odds of making money regardless of what the market does. If you have any questions, please leave a comment below. Hopefully you will follow me, subscribe to my channel. I'm going to show you what I do in 2023. I've been doing this for multiple years, and every year that I've been doing this, I've been making money using the options on top of my 401k plan, or on top of my Roth IRA account. So follow me. Let's see what I can do for 2023. As always, let's do this together. Let's do this $1 at a time and have a profitable day. Bye-bye.